All right. Hello, world.
Hi there.
Faith and Tatiana back here.
All right, so we're back. Real estate talk for you on this Thursday afternoon. It's so gloomy out there. What is going on? It was so beautiful yesterday.
Oh my God, the sunshine was actually blinding me.
Yeah.
And then the sunset, did you catch that? It was lovely.
I did not catch the sunset, but
Yeah, it was nice. So today we're going to talk about buyer tips on multiple offers.
yes, we've been, so the rates, the interest rates have been really, really low. We've been talking about that for the last, I don't know, 8 months or so.
Yeah, in April.
So we're seeing a lot of properties go into contract really quickly, and I think there's a lot of buyers who have realized that the rates are fantastic, right?
Mhm,
So if the rates are lower, then your buying power actually goes up. So that's great for buyers. But we are seeing multiple offers come back, and not just maybe two, but like 4, 5, 6. So
Okay.
for a while, we were back to just seeing maybe 1, 2, possibly 3 really strong offers, and now we're actually seeing.
When we mean multiple now.
Yeah,
We're like, multiples. Okay.
Multiples and multiples.
Understand it? Yeah, we're multiples.
So we're gonna revisit. We're definitely gonna revisit some tips for how to try to win a multiple offer situation. So we're just gonna dive in. I'm gonna hand it over to Faith.
Right.
Oh wait, we didn't introduce ourselves. Tatiana Zanellis with EXP Realty.
And I'm Faith Watkins with Guild Mortgage. And here we go. But Ching, I am the first person that you would talk to, so that actually works out really well.
Yeah.
Well, you should be. I know that a lot of people probably go to a realtor first, and then it comes my way. And what you're going to be looking for is your pre-approval, and that's figuring out what you can afford on a sales price and or monthly payment. I try to work with a monthly payment as a gauge as to where you fit, and then kind of go backwards from there to figure out a price, depending on down payment, credit score, all those other factors. But what you'll want to do, and especially in the multiple offer situation realm, I mean in general, is get pre-approved, not what's called pre-qualified. And what that means is pre-approved is to actually send in your documentation, have your credit pulled, and do a full analysis. And then on my end, I run it through Fannie Mae and Freddie Mac to verify that you're indeed qualified on that end as well. And you'll want to send in usually pay stubs, W-2s, taxes, bank statements. Depending, we may or may not need the taxes because we can pull those from the IRS sometimes. But the documentation is a little bit less now, which is nice, but it is still important that we have those in order to get like the actual pre-approval, because pre-qualified is you telling me and filling out an application without seeing documents, and that's great. But there's been a lot of scenarios and times that I've gone through and looked at people's numbers versus what they've told me, and they end up being a little bit different. So you want to make sure that I get eyes on your documentation to do that. So.
Right. And so when you're competing in a multiple offer situation, a pre-qualification letter just isn't going to cut it, because if there's 4, 5, 6, 10 offers, and the other offers are actual bona fide pre-approval letters that have been
Bona fide, I like that word.
Yeah.
Right? Yes, you should use that word.
I like that word too. And it just means that all of your documentation has been actually verified. So that's an important tip.
That's a great point, because as you're going along, and if you try to tell a seller, hey, I'm going to have it tomorrow, they're going to be like, come on, are you really serious?
Right.
Like, what are you doing here?
Right.
So yeah, and doing it in advance. That was kind of another piece that I was going to get at, is trying to get everything up front. Like, if you think you're going to be looking in the market in spring, now is a great time to start working on your information, because you don't know. I mean, hopefully there aren't any red flags, but you never know, and you just want to make sure that everything is dialed in. Your income, your assets, your credit, your collateral, everything. You want to make sure that it's dialed, and it doesn't hurt to have it done early. If anything, it's a benefit, because then you can catch anything if need be.
Right.
And then another thing we offer is what's called like a CAP approval, which is a kind of a, I guess, term in our own company, so it doesn't really mean that much, but ultimately it's getting underwritten ahead of time. And we also offer, I think it's $500 if for some reason the transaction were to work out. But we're not in the business of giving money away, and so we're going to ensure that you're going to be approved by underwriting. And so we do that in advance. So that is also a little bit more secured letter because it comes from underwriting. They actually sign it and say
nice.
underwriting has approved this. And so that's kind of like another step up from pre-approval.
Right.
So if you're really finding it difficult when you're out there making offers and you're competing, have that done, and then that actual signed, and it's like a certification. I mean, it looks like a bonded and sealed, and it's it's a 2-page letter as opposed to a 1-page, just solidifying the underwriting team has approved it, and then from there you probably have a better chance to.
Okay. Good.
Excellent. Yeah.
Good.
Do you want me to keep going, or you want to slide in next?
Well, you were going to talk about different types of financing. Is that correct?
Ish. I don't know that one's a huge one. I think that kind of comes into play with like what your down payment and stuff is. So, I mean, you love to tell everybody they could get financed by conventional, but not everybody can. So it's hard to kind of go tell people one way or the other and to figure out your financing. Yes, that of course is important, but that will come with the pre-approval.
Yeah, I mean, I would say that if you have to go FHA just because of the down payment, the down payment issues, then you're going to be going FHA. But there's ways that your realtor, and actually if I've got FHA buyers and they're competing with like a conventional buyer, there's ways of working with the seller to kind of reassure them. Sometimes FHA can be just a little bit more restrictive in terms of like repair issues. So sometimes you can get ahead of that before you actually make the offer, just by having a conversation with the seller's agent.
Oh, got it. Okay.
So I'm going to go over having fewer contingencies. So a contingency is like a protection that's built into the offer for the buyer. And the biggest one is the inspection contingency period. That's where your realtor is helping you as the buyer go through all of your different inspections: house inspection, sewer scope, radon testing, oil tank, maybe mold testing. Actually, this we're going through here, it recommended waiving the home inspection, but that could be pretty risky, and I usually don't recommend it unless the buyer is very, 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 very savvy and they're already planning on doing quite a bit of work anyway. Even so, you might end up with like an oil tank that needs to be decommissioned. You might end up, usually you can see if the roof is shot, like if the roof is really going to need to be re-roofed. But generally what I do is I'm going to call ahead and find out what's most important to the seller. And sometimes getting through the home inspection period in a quicker amount of time is a great way to go. Instead of 10 business days, maybe it's 5 business days. It means you have to really hustle. But generally, I can line up all the inspections for my home buyers and get through it. It just means it's going to be maybe a little bit hectic during that time, but we can get through it. The other thing is that if you've been to the home maybe a couple times and you've talked to your realtor and the home generally looks like it's been very, very well maintained and well kept, that just by maybe looking at the permit history, that it might have a new electrical panel, maybe it has a new furnace and a new hot water tank. You can see that the roof, for the most part, looks good. It has a lot of life in it. You can soften up your inspection language by saying, the buyer won't ask for any repairs that are under, let's just say, $2,000 or $2,500. So something like that. So we're not going to be nitpicky and ask for, a little piece of dry rot to be repaired. So that's another way I think of putting the sellers at ease. Sometimes you can also say, the buyer won't ask for repairs unless it's something that's really catastrophic. So that'll leave open like a broken sewer line, a leaking oil tank, maybe a foundation issue that really is pretty serious. So that it's softening that language, but it's still protecting the buyer.
Great.
So that's an idea. The other
learned some new stuff today.
Oh, good. Yeah. All right. Awesome. Let's see. The other contingencies that are protections for the buyer obviously is the appraisal contingency or the financing contingency. So what that means is that the appraisal for the home has to come in at that contract price or better. And if there's a multiple offer situation and the price of the home is getting pushed up with the multiple offers, so let's just say maybe it was priced at 450, but now the offers are coming in at 475 or maybe even 500. I always have a conversation with my buyers about can they, if they really, really, truly love the home, can they make up for a possible shortfall in the appraisal. So let's say they feel comfortable with putting down an additional like $5,000. Let's say the appraisal came back at like at 490, but we are at a contract price of 500, so about $10,000 apart. And the buyers really, really love the home. They feel like it's worth 500. And so if they have additional $5,000, they can offer that up, and you can actually write that into the contract. So that would also mean that the seller would have to concede a bit too, right? The seller would have to come down, so you can
meet in the middle.
Meet in the middle.
Yeah. I've seen that happen a lot.
Yeah, I mean, other times it really depends on what your buyers want to do, but just talking that through with them and just saying, well, if there is a problem with the appraisal, this is something that we can offer if you feel comfortable. So the other thing, let's see. The other contingencies like the title report, you don't really need to, I wouldn't recommend waiving that because escrow and title are going to work together to try to clear any liens or judgments off of that title report. And it's basically a 5-day inspection, or I'm sorry, contingency on the title report. So that doesn't really need to be waived. That's not something that,
I didn't know that was a thing.
Yeah, it's not something that I would normally recommend. But generally focusing on that inspection period and then also the appraisal, those are kind of the two big timelines in the transaction, and those are the two areas where things could potentially go south. So what you're saying to the seller is like, hey, we're willing to to work with you and really make this work. It's better in a multiple offer situation if you can allow the seller to understand from you that you're really serious and that you want to go forward with the sale.
With them.
Complete the sale.
Cool. Yeah, that's good stuff, and I've definitely seen that with transactions that I've worked, and I haven't seen it really go south too much. I think there was one time where there was an appraisal situation, and I think the seller actually did end up conceding anyways. But I mean, you never know as you go along. So my next thing was, and it kind of goes with the pre-approval a little bit, is just really understanding what your max price is, whether that is a monthly payment number or a sales price number. Really understanding what that looks like when you go out and you're making these offers, because if you're making them and you're wondering like, oh my gosh, like if I had an extra 10,000, is that going to blow my budget? And in the scheme of things, $10,000 when you amortize it over 30 years, depending on the rate, is give or take about $50 a month. It's not a lot. And so if you're going to be going between a 490 or a 500, like you were saying, you're only looking at like a $50 a month payment difference. So really understanding like what that max is. And so the other piece that I was going to say is knowing the number. This is kind of how I do things, is on a scale of 1 to 10, like how much does this house meet your needs? If it's a 10 and it's like top of the line, you have to go all out. You have to give it your best shot and know exactly what that high number is, and go there and really show the sellers that you're serious, you mean business. And then with that is like kind of conceptualizing yourself, like what this number is. You're willing to go that high because you know this is the best house that you could possibly get. You've looked at everything else, and you know that, again, only 10,000 is $50. So let's say the seller comes back and is like, they want another 5,000 or something. You're like, dang, 5,000, but really, again, only $25 a month. So those are things to keep in mind as you go out there and just kind of have like rough numbers in your head.
Right. I'm going to just tag along on that. I usually ask my buyer clients, at what number would they be okay just letting the house go to another buyer, right? So at really you want to find out how comfortable your buyers are going up in price. And one thing that I think we're going to see come back as a tool is the escalation clause. So the escalation clause for the buyers, you could write in the very highest price that they're willing to go up to for a maximum, but maybe they're willing to pay like $2,000 or $3,000 over a bona fide competing offer, right, up to that maximum. So that's another strategy. Of course, what you're doing with that is that you're also kind of laying all your cards on the table.
Sure.
You're letting the seller know, hey, you know, we feel comfortable going to a maximum of X. But that does give you a little bit more flexibility in the sense that if you're not quite sure what the highest offer is, at least you can offer something like I was recommending $2,000 or $3,000 over.
Okay. Yeah, that's great. I like that.
Oh, and then the other thing about that is that if we were to use an escalation clause and you did end up being the highest offer, then I asked for documentation from the seller's agent to actually prove that we like to see what the second highest offer was, so that way we actually have proof that there was
somebody was asking about that the other day.
Right, that there was an actual offer for let's just say, you know, $495, and then we came in at $500, for instance.
Right. Yeah, and then also, and understanding, you know, what those numbers look like. So depending, when a lot of people are putting, let's say, 20% down, you have wiggle room to either put in more cash, or you can even drop your loan to value if you're okay with maybe mortgage insurance. So there's kind of a couple different ways you can do it on the financing end as well. So understanding what the escalation clause means, and if you're going to be going up in numbers, you can always reduce, you know, the down, or the percentage of the down, I should say, to help it be more comfortable for you on your cash to close. So there's kind of a couple ways we can wiggle around that. But yeah, I like the escalation clause. Like if you really want the house, and then somebody was asking me like, how do you get proof of that? And I was like, well, it's like they'd be able to share the contract, like maybe just like white out a couple things.
Yeah, I do ask for a copy of the contract. Typically, it's just like the first page of the contract, and then they're gonna white out who the other buyer was and who the other buyer's agent is, just for confidentiality. But that'll show you, you know, what the offer was written for.
Yeah.
And then also on that worksheet is that it has to be sort of the net highest offer. So maybe if there was closing costs, then you have to take those into consideration as well.
Totally. Yeah, and another thing, and this might be maybe a little bit more barely too, is maybe writing a higher earnest money amount as well, because that can be something that can maybe win it over, depending on the seller, of course, and what their parameters are, what really is important to them. But most people do 1%, but if you go beyond that, then you could be showing like your seriousness of it too.
Sure.
And or larger down payment, that sort of thing. And the last thing that I have is we have a calculator app. It's something that we provide for our clients, and it's for free. And if you're out there making offers in the world, it's super simple. You just plug in your numbers, and then it'll populate monthly payment, PITI and MI if you have it, because it automatically calculates the MI for you. And that's something a lot of people don't know when they're going out there. And so, and it'll do FHA, conventional, jumbo, you name it. And so that's a great way to really help you with understanding like the monthly payment. And you can always send me a text, and I can confirm whether or not that's what the number would be, because I have the calculator on my phone too. So when somebody asks me what's the payment, I'm like, well, let me just pull up my little app and I'll tell you. So that's it. Yeah, that's a helpful piece, because I think a lot of times for people, just understanding the numbers, because sometimes property taxes can be, you know, really high or really low, and you're like, how much is this going to affect my payment? So that's kind of what I have.
Yeah, no, that's great. The last thing I was just going to say is the earnest money deposit. So we already touched on that.
Yeah.
Making sure that is really strong, maybe even double what you would normally write for an earnest money. And then the last thing is that, and this is probably pretty self-explanatory, but you don't want to make a lowball offer. If we're in multiple offer situations, and I have, as your agent, I have information that the offers are going over the list price, then it just comes back to whether, like, how strongly the buyers feel attached to the home and how much they want it, and if it checks all of those boxes for them. And so I always go back to, you know, what number would you feel comfortable just letting this house go, or what number do you feel comfortable writing your offer for?
Yeah.
So
yeah,
that's about
that's
it.
right. Yeah, I like it. Good
All
stuff. Tag team.
Good stuff.
All right. Have a great afternoon, and thank you for tuning in. If you have any questions, please let us know.
Yes, and we'll see you next month.
All right.